Alright guys, hello everybody. Today we're going to be looking at the function of the OneClickStock app. So we're going to learn today how this app functions, how it helps investors save time, manage risk, and avoid loss. And also it helps them to pick the winning stock so they can invest in it and make a profits and hopefully in a short time. So the things that this app will provide to you guys is very essential to your understanding of the any company, whether you should be investing in it or not. Okay, we're gonna cut the introduction and just go ahead and show you how this app works. First of all, when you go to your when you go to your app store, all you have to do is just type OneClickStock and you'll be able to find the app. Okay, so just type OneClickStock. Here we go. It's the one in orange. So there is no other app called OneClickStock. It's the only app. It's Future Finance. That's the name of the company. Okay, so you just click on it. You subscribe. It's $1.99 per month. There is 3 months, 6 months, and 1 year subscription. And you save, of course, money if you subscribe for 3 or 6 or 1 year. But it's $1.99 monthly. Give it a shot. Try it for 1 month and see how it works. If you're gonna benefit out of it or not. $1.99 is nothing. It's worth the investment. So when you get to this screen, you're gonna see 3 buttons in the bottom of it. So you're gonna see home, you're gonna see one that says stock, and it's gonna see the about. The about, basically it tells you about the app. It explains in words how this app functions or what does it provide to the investor. But the best way to know about it is just by practicing, by putting in stock codes and then practicing. The home page is only this shot right here. It shows you the logo and all that. So now this is the one that we really use. Is the one on the bottom says stock. So all you have to do is enter the stock ticker and then you get the results. So instead of you going picking a stock and going to read about it here and there and digging in their financial statements, seeing the balance sheet, income statement, and their cash flow, and then reading about the company, what they do, what they don't do, and then look at the history, and then look at graphs, and look at charts. You're gonna do all that work. It's gonna take hours for you, my friend. And this app will save you all this time. It just tells you it will tell you in one click whether you should invest in this stock or not. It's gonna pull the results for you that takes you hours to find about it. It will pull all that in one click, in 1 second basically. Okay, so let's now just find a stock to actually look at. Okay, so I normally use a cool website. It's called finviz.com. Okay, and I just basically sort my search. I'm interested. I have a specific strategy that I follow to how to find the stocks to invest in it, and then I test them on this app to know which one is good, which one is bad. And that's basically the general idea of this app. It just tells you in one click which one is good, which one is bad. Okay, so you can scan hundreds of stocks in very short period of time. So let's say now we wanna, and I just wanna bring your attention to something, that the app, if the company is located outside the United States, the app might not bring any result just because of the way they disclose their financial statement. If it's not available on the source where the app is taking the data from, then you might not find a result. But it's happening, once here and there. Let's say 95% to 99% of the stocks that are located in the United States, they're all gonna see results for these stocks. It's just company, not ETF or any of that kind, not index. You cannot put an index in there. You just put a company ticker code for the company. Okay, so let's say this one is located in Canada. It's just ACB stock. It's a healthcare company located in Canada. Always good to read just to know what kind of business they do. Just know, do that yourself a favor. Just if you want to invest in a stock, just find out what kind of business they do, there's always in the app that you use to basically execute your trading, there is a profile, company profile. You read about it, whether it's a pharmaceutical, it's industrial, it's technology company, whatever it is, okay? So ACB, just make sure now when you type the ticker code, make sure you type the right code. There is no lowercase and no caps, no lowercase. Just type it the way it is. It's ACB. Make sure you type ACB, not ACN, for instance. So it's ACB, and then you click on Get Best Options, and in one click, that's the philosophy of the app. In one click is gonna bring for you all the results that you need. Okay. So first of all, right on the top in blue, you're gonna see this this data that is pulled out. It's telling you what is the current price. It's 148. 52-week high, 52-week low, high and low, and then average volume. This information is always important. I'm gonna do a separate video talk about why it is important to know 52-week low or high and average volume. What does this information mean to the investor? Okay, but right now let's focus on the functionality of the app. Okay, pull out those information, put it right there on top of the screen. Now this is what the app, all this stuff you see in color, this is what really the app is generating for you. It's using innovative formula ratios that are used only in this app. Nobody else has or uses these formulas and these ratios except this app to generate the result that we are talking about. Okay, so right now you're gonna look at the top, you're gonna see the best price to buy, best prices to buy. So now here it's listed 5 prices. It's listing 5 prices. Okay, what does this mean to you? It doesn't mean that now go ahead and buy it. No, it's just telling you, let's say the recommendation is buy it, okay? Then this is your best price to buy, up to 49 cents. Good price, up to 186. Fair price, up to 219. So between 186 and 219, and so on, okay? Risky price, super risky price. Okay, so this is what basically it's telling. It's just telling you that is the breakdown of the prices. Up to that price, it's the best price. That doesn't mean it's telling you buy it. We're gonna see at the end what it's gonna say. But now it's telling you if this were to buy it, then it would be a best price to buy it up to 49. Between 49 up to 186, that's a good price. So it's not a best price, but it's a good price. That meaning it's still might fluctuate a little bit more, a little bit down. And then there are other pieces of the puzzle that will tell you why it would fluctuate if it's not a best price, if it's a good price. So we're gonna see how can we tell that it might fluctuate, okay? So now let's move to the second. So now the current price is falling below the good price, but still that doesn't mean that go ahead and buy it because it's falling there. No, we're gonna look at the recommendation. We're gonna see what the recommendation is saying, the recommendation tab. So now the financial status is saying weak and it's rated 4. Normally it will be rated between 1 and 10. So 1 is the weakest, 10 is the strongest. So it's weak. It's something, it's in red. So everything you see in red, that means you need to watch out. So it is weak. So when the financial when the financial strength of the company is not that strong, so there is possibility that they're gonna need money for funding. Either they're gonna issue new shares, which is gonna affect the price of the stock, it's gonna fall down, or they're gonna borrow more money, okay? Or they're gonna borrow money, and then they're gonna increase their debt ratio, or they're gonna get some investors, and that's gonna be a good news that they will inject some funds in there because they are interested in the business that this company is doing. And they're seeing some hopes or they're seeing some good signals that make them interested in it, and they go ahead and they invest, they buy shares on a market value or whatever how they do it. But you hear that the company receives like investments such and such, and then the prices jump and go up. But when it's weak, that means this company might be facing financial distress to pay its short-term debt, to cover its operation expenses. Okay, that's what this financial status means. It's not the lowest, it's not the weakest, it's weak. There is less than that, number 3, number 2, number 1, which is the worst. So weak is right on the edge. Okay, it's right on the edge. So it's gonna keep your eye on it. It's gonna tell you something later. So I'm gonna teach you how to think about it when it's weak. Volatility is not volatile. So there's a lot of people, they hear about the word volatility, but they don't know really what does it mean, or what is it exactly, or how does it affect their decision-making process when the stock is volatile or not volatile. How does it affect their expectations, let's say, when they're gonna be making money. That's what the volatility basically tells you. So it basically helps you to expect whether you're gonna get your money in a short time or in a long time. When it's not volatile, that means the price doesn't move a lot. Okay, it could be active. The volume could be in millions. Like this one, it's 9.8 billion. Normally 9.8, that means it's an active stock. But it doesn't go up and down, it's steady. So it takes time because before it jumps or before it falls. Okay, and might fall before it jumps, So, I mean, it depends on the status of the company, but the bottom line is that volume doesn't mean, if it's a lot of volume, doesn't mean it's a good stock. A lot of people, they mix, they get confused. We're gonna do a separate episode about that. Okay, so it doesn't mean it's a good stock, it just means it's active. Volatility, when it's rated 1, that means it's kind of dead. Okay, it's kind of dead. That means if you invest in this company, whether it's you listen to the recommendation or not, but let's say you invested anyway, then that means you're gonna wait. You're gonna wait, and trust me, this is a very accurate result. You're gonna wait before you see this stock moving and giving you some revenue, some profit. Let's say you bought it at the best prices possible. Let's say they're a great company. They have billion, their net income is positive. They save money. And let's say it's a green over there, not where it says financial side. Let's say it's a green, not red. But if it's not volatile, that means you're gonna wait before you see results. So that's really number 1. So it's the weakest. The volatility is no volatility. It's dead. It moves. It's steady for a long time before you see something happening. Okay. So this to really figure out volatility, financial state, basically you're gonna do a lot of work. It's gonna take you hours to go to the financial state, to go to historical data, to go to the pricing, to see when it was high, when it was down, how long it goes high, how long it goes down, how many days, a month, a day, in a week, a year. It's complicated process, and we're doing it for you just like that in one click. Okay? Recommendation is telling you strong buy. So now we get to the bottom of it. So now the recommendation is telling you that this stock is a strong buy. It's up to you to buy it though. But it's telling you strong buy, but also it's telling you it's not volatile. So if you buy it, you're gonna wait. If you buy it, you're gonna wait. If you buy it, it's telling you it's a weak financial status. So if you're not buying it at best price and it's at good price, so there is a chance that might actually fall down to best price. It's telling you strong buy, but that doesn't mean because it's 149, it's falling between best and good. Okay? So when it's weak, the best thing is to buy it at best price. That's what I do. Okay, the best way is to buy it when it's weak, buy it at best. If it's recommended to strong buy, then buy it when it's at best price. If you buy it at good, between good and bad, then you gotta keep your eye on it. Just keep your eye on it. And anyway, it's gonna take time because it's telling you it's not volatile. Which is good in one sense that you won't see it falling from that price, like that quick if it's going to fall, but also you're not gonna see it rising at the same time. So this is what the app is telling you. Okay, it's telling you strong buy, but it's telling you it's not volatile, and it's weak, meaning they are under financial distress. Okay, but they are at good price to buy it, but you're gonna have to wait. And because it is red, keep your eye on it. So it's up to you now. There is another video I'm gonna do about strategies. So when do you really, how you're gonna decide how much you're gonna lose on a stock if you decide to buy one and then at a certain price and it falls a little bit. Even if the stock is super good, it might still fluctuate a little bit, right? Before it do its jump. So how much to really manage the risk? It's risk management. Here is telling you strong buy, but you have two other items bad, which is not volatile. That means it doesn't move a lot, which is in this case when the financial status is weak. Not volatile is something good if you're not buying it at best price. So if you're not buying at best price, when you have a weak financial status and you're not buying at best price, which is here, if you're not buying it at 49 cents, then being not volatile is good for you, not bad for you. Because you're not gonna buy it today and you see it tomorrow falling 50 cents. But you're not gonna see it also rising 50 cents. So you're gonna watch how it moves. You're gonna have the time to watch how it moves. So if you see it, it depends how patient you are. Okay? It needs patience in this case. Okay, let's pick another stock. This is a Canadian company. Let's do the ACell RX Pharmaceutical. It's a healthcare. It's located in the United States. Let's do ACRX. ACRX. Okay, so to go and clear this page, you just click on stock and go back over there. And now you type in new stock ticker code, and then you're right there. ACRX. Again, just watch and make sure that you type the right letter. ACRX. Because if those not correct, then you're gonna go to either different result or no results. If it matches any other company, we're gonna give you different result. If it doesn't match anything, then it's gonna give you 0 results. And you're gonna say, hey, what's happening? The app is not working. No, the app is working. You just typed the ticker code wrong. So make sure that this code is correct. ACRX. Get best options. There we go. Okay, so the same thing in blue right there on top. 52-week low, 52-week high, volume. So it's active, like I said, when it's in volume in million on average, that means it's active. Okay, current price is 25 cents. So now best price to risky price, we're starting from 7 cents, 23 good price, fair price 31, 40. You see they're close to each other, 66 cents risky price. My philosophy, if they are 52-week high, $1, I don't invest in it. If you want to invest in it, it's up to you, but I don't. I'm going to do a separate video show how do you pick stocks that you have a potential to make money. Okay, this one definitely is not volatile. Look, before I look at the stat, I would know just from their 50-week high and low. It could be active, that has nothing to do with it. It could be active, could be there is a lot of volume, but that doesn't mean it's gonna move anytime soon. And if it moves, how much is gonna move? It might move 10 cents, 5 cents, that doesn't do anything to me. Okay, so financial status, so it's the price is falling between good and between good and fair. Between good and fair. So 25 cents, that's above good price to buy and below fair price. Status, it's weak, so that's the red, that's where you need to watch out. Not volatile, okay, so it doesn't move, it's kind of steady at this price, kind of steady. Okay, so it's pharmaceutical. You know, pharmaceutical, they can be surprising though. Something happens, they hit the end point successfully, then this will be 20 bucks in 3 seconds. So it's recommended, saying fair to buy and monitor. So when it's fair to buy and monitor, that means it's not a big fan of it. It's fair to buy, but you gotta really be very careful. Why you gotta be very careful? Because you have a weak financial standing, okay, and this is a 25 cent, they might actually run out of business. It's very possible. So you see it falling, it's not gonna fall right away. You might wake up and you find it falling right away, but it's saying not volatile, so you might have the time to figure out how it's moving if you decide to go with it. My advice, I don't invest in these stocks. I don't. Okay, we're gonna do a separate video about how do you pick stocks, how do you look for stocks, how do you do your search, how do you know, okay, I should do search and pick these companies to run them, to scan them in this app to know which good, which bad. You don't want to be confused. You have millions of stocks in front of you, want to scan them all. No, there's a lot of stocks that you don't want to really bother. So how do you know, how do you search? We're going to do a separate video about how do you look for a stock, basically. How do you look and find really stocks that you that you might be interested in and you have the potential to make money out of them. Okay? So we're going to stop now. We did the example on 2 different stocks, and we're going to be talking about this functionality of this app and showing you more examples, but we're going to explain also things about like volume, like what does it mean 52 weeks high, 52 week low, and what's really a volatility, explain a little bit more. Okay, and then we're going to talk in one video about timing. Okay, when do you buy, when you should buy, before 10 o'clock in the afternoon, before 2, after 2, before closing. Sometimes it is case by case, but there are rules for the timing you should know about, and that's going to help you avoid risk or manage risk and avoid loss, okay, and make more money than if you're just doing randomly, you don't know what you're doing. Okay, we'll see you in the next video. Please subscribe and click the bell so you get the